So guys, welcome back. This is Aqua FX. So today I want to take you guys on this very strategy. This strategy is 80%. This strategy is 80% win rate. Imagine having like 3 wins in a row and 1 loss. You see how the strategy is. And when you are losing, you may lose twice, but you are not going 1-to-1, 1:1 risk to reward. This strategy is very okay. I'm going to do it and show it to you guys right now. I'm going to do it and show it to you guys right now. We are going to go to my chart. I'm going to show you guys step by step on how to do this. So let me mention the criteria that you need for this strategy to be effective. You have to follow it step by step. You come into the market daily. Any day you take a loss, you are gone. You're gone for the day. As in, any day you take a loss, you've done for the day. You don't have to take 2 trades, except maybe you want to risk 2%, then you risk one during London session and one during New York session. So this strategy works effectively, and I'm going to show you a pair that you can use in trading this strategy. That doesn't mean it does not work on other strategies, other pairs. It works massively on other pairs. So this strategy is very effective. The strategy is very effective. So here I'm using GBP JPY. That doesn't mean you cannot use, or sorry, GBP USD. That is the pair I'm choosing. That doesn't mean you cannot use other pairs to trade this strategy. That doesn't mean you cannot use other pairs to trade this strategy. So I'm sharing this for free. I'm going to share this for free. So if you learn something from this, do well to share it to others, because this strategy is very effective. Do not keep it to yourself only. So let me go to my chart. So right now, this is my 2-hour chart. I'm going to be making use of sessions. I'm going to be making use of sessions, market structure, and sessions, market structure, and a candlestick and candlestick confirmation. The candlestick confirmation we are going to be making use of is the engulfing pattern. So let's get straight to the chart. First, I'm going to start with a bullish trend. I'm going to start with a bullish setup, and we are going to be targeting 1:3 risks to reward. I want you to see how many trades you've taken and how many losses you take. You should add up. This strategy is very effective. So right now, here is my bullish trend. Okay, let's just say a bear. Let's start from a bear. I think this video will be too long if I'm to start from a bear setup. It will be too long, but for the purpose, so that you should know how it really works, let's do that. So first, if you don't know how to make use of sessions indicator, I think you should try your best to make sure you check other videos of mine. You see how to make use of sessions indicator properly. So I have to enable my sessions indicator right now. Not that I'm just going to enable. This will be after you read your structure, you enable your sessions indicator. That is London or New York. So I'll off it for now. I'm trying to read my market structure before that. So this is my 2-hour chart. You can do this on H1, but I'm going to be making use of 2 hour for the purpose of this tutorial for now. So I'm to mark my structure. So right now we had a structure right here. This means that this market has broken structure to the downside. So the only trade we are going to be taking is a sell setup, not a buy. So now it's for you to enable your sessions indicator so that you will know what you are doing. So I have enabled my sessions indicator, and also you need to enable your sessions break if you want, but if you don't, you just leave it as far as you can understand the trend properly. So the market is bearish right now. We are going to take trade during London or New York session. So this is our London, but this day we did not take trade here. This is because this was a candle that break through this. This was a candle that closed below this low. You know, this day this market was bullish. Then on our London section, this market was bullish. Then during our London section, which happened to be this box here, so during our London section, we didn't see engulfing pattern. What is our engulfing pattern? Our engulfing pattern on a bear scenario is a candle, a bear candle followed by a bullish candle followed by a bear candle. So that is a bear setup of an engulfing pattern, which means that this market, it's a continuation pattern. It can either be a sell setup or a buy setup. It depends on where you are reading the market from. So in this scenario, it is a sell setup. So now this market closed below this zone. As this market closed below this zone, we are to take a sell trade. We are to take a sell trade. Where are we going to take our sell trade? This will be at the close of this candle. Note, this is our 2-hour chart. Then once you take your trade, where will be your stop loss? Your stop loss has to come to the wick. And what will be your target? Your target is going to be 1:3. No matter how fat the candle, if you see that the candle is very fat, then you leave it, you don't take the trade. But if you are taking this trade, you are going to target 1:3. I want you to count how many losses we encounter and how many wins we encountered. So this is our 1:3. Our 1:3 will be right there. We got our 1:3 right there. Then during London section, note the market is bearish. During London section, you can re-enter a trade from what you gained so far, or you can open a new position entirely. During London section, this was a candle. We had a candle here. We had a candle right there. We had a candle right there. And as London opened, it closes below that candle. So you enter your trade right there. Your stop loss has to come below this candle, and you'll go for 1:3. You got your 1:3 right there. And then during New York section here, we had engulfing because this was a candle, and then the market closes as an engulfing during this time. So if you take this trade, where will be your stop loss? Your stop loss has to be at this range, and you are going to target your 1:3 again. So if you place trade right here, if you place trade right here, this candle close bull above this candle, but you see this wick, this candle was not able to close above this wick here. So here is a candle that closed above the wick. Then you place your trade right there. Your stop loss has to come below this candle here, and you are going to target 1:3. You are going to target 1:3. You got your 1:3 was gotten right there. How many setup have you won so far? We are coming. Every day is not Christmas. So during this day, The market open right here. You are expecting what? A bear candle, because the market is bearish. Then this market, it closes above this London section. We are still waiting. Then during New York section, then we have a close above this candle here. We have a close above this candle during New York section. Then you place your trade right there. You short. This is the candle that close above it. You short right there. Your stop loss come below those candle, and you are targeting 1:3. How many losses have you encountered so far? None for now, but you've gotten 1, 2, 3, 4. You've gotten 4 trade. If you are risking 3% on this setup, you are risking 3% on this setup, you will know what you've gained so far. Let's continue. Now, on our 2-hour chart, we have a break of structure to the upside at this point. So, London sections open right here. London open right here. London open right here. See London here. London open. You are expecting a bear setup. This was a candle before London open. So you are expecting a bear setup. This candle gives you engulfing. You place your trade. Now you've gotten hit out. You place your trade at this candle. Your stop loss has to come below this. And what happened? That was a loss. So this was a loss. Then that was during London session. Then during New York section, you are still expecting this market to give you engulfing pattern to the downside. And this is what happened. This is your New York. The New York closes. You did not have any engulfing candle. So this day, you will not trade market. So that is why session breaks come in. That is where session breaks come in. It will help you to know previous day and another day. So then the markets now finally break structure. We had a structure here, right? The market broke it to the upside. Now we are expecting a buy setup. So we've lost one trade right here. We've gotten a loss. We lost one trade right here. Now we are expecting a buy setup. What happened is during London sessions, we are expecting an engulfing candle. So this is the candle before London sessions open. That was the candle high before London section open. So as London open, we did not see any engulfing candle to the upside. The engulfing candle we are looking at to buy this market is something like this. Let me show it to you guys. That is for bull setup. Is something like this. Yes, it's something like this. This is the proper one. A bear candle followed by a very fat bullish candle. So these two candles here happens to be our engulfing pattern. That is a bullish engulfing pattern. So that day we did not see setup, so we did not trade that zone. So now this market finally breaks structure again. It finally broken structure again to the downside. So what will you do? The only thing you will do here is for you to take a sell trade again. So during New York session, this market opened and it gives engulfing candle right here. Since the trend of the market has changed to bear, you are going to take a bear setup. Then as this market close bearish, you place your trade. Your stop loss has to come above this candle right there, and you target 1:3. You've gained 1:3 again. Then London section open right here. London open right here. Another day, it closed with engulfing candle. It engulfed this very one. What you will do is for you to place a trade again. Place a trade. Your stop loss come above the candle, and you go with your 1:3. You've gotten another 1:3 right there. Let's keep going. Note how many losses have we gotten so far. We have 1, 2, 3, 4, 5, 6. I'm not supposed to share this strategy with you guys, but I have to because there's nothing to hide, like I said. So 1, 2, 3, 4, 5. 5, 6, and you lost one trade. Let's go again. So this day open, you see there's London here. This box here represents my London session. We have a box here, and the market closed bearish. As the market closed bearish, we are taking a sell trade at the close of this candle. What happened? This market hit a loss. We encountered 2 losses so far. We have encountered 2 losses so far. We have encountered 2 losses so far. Then the market has broken structure to the upside at this point. The market broke structure to the upside. What you would do right now is for you to make sure you are taking a buy trade. For a very long time, we have been taking sales, so we have to take a buy trade. So now, during London section, during London or New York, you are expecting a bull setup, which is a bullish trend, a bullish engulfing. The trend is already bullish, so you are expecting a bullish engulfing for you to trade this setup. So I was telling you that this setup is 85% win rate. So you will know how to rate this setup after which you watched everything. If it is 85 or 90% win rate. Let's go. So now during New York sessions occur around here, and we are expecting a bull setup. The market was bearish. Then we have a nice bullish trend, a nice bullish setup there. Then we place our trade. We long for a very long time. We long. Our stop loss come below the candle. How many are we going to target? 1:3. 1:3, which happens to be there, and that was a win too. Then during London, this was London, we have engulfing candle again here. If you place that trade, you will lose. Your stop loss was there, but what happened? The market hit you out. Sorry, the stop loss was that was your entry. Note that this market has moved 1:1, 1:0 point something, but our own is to target 1:3, not to take partial. So that was a loss. Now again, during London session again, during London, which happens here, we have an engulfing candle See, this was a candle before London opened. We have another candle here. We have another candle here. So we want a candle to close above that London. And the only candle that closed above that zone was this one here. So you place your trade right here. That candle is long, very, very long. Like I said, if the candle is too long for you, then you may stop not to place the trade. But if you wish to find your stop loss come below the zone of that candle, and you target your 1:3, which is right there. Then again, during London session again, during London, which is right here, we have another bull candle. We long again. Stop loss come below. Our target is what? 1:3. What happened? We win again. Then during New York opened at this candle here. It opens at this candle. Let's check if it closes bullish. Okay, you can check and look at it very well that the candle closed above this wick. This candle closes above this wick, so we are going to take our trade. So we place our trade right here. Very simple. We place our trade right there, and your stop loss come below the zone of the bull candle, of the bear candle. And what will be your target? Your target will be 1:3. I'm getting tired already, guys. 1:3 is right there. Then London sessions open again. You see this candle? See this candle here? This candle closes above this wick here, which is, if you turn it to a line chart, it will show you that it has broken above this. But we want a bullish candle. If not, that is where you're supposed to place your trade. If you place your trade, long trade, on this candle, and your stop loss come below here, you will target your 1:3 right there. But for the sake of engulfing, because that candle did not engulf, this is where we are going to take this trade from. We are taking it at the close of this candle, and our stop loss range, you see what it is. The stop loss range here is too much. That is why at times you need to ignore some, and you have to take some if you are okay with that. So you go for your 1:3. That means you risk 1% during New York, you risk 1% during London sessions and New York, 1%. So your 1:3 was at that moment. You see, that market was not able to complete your 1:3, but it completed your 1:2.77. Just few pips for you to hit your TP right there. So that trade happens to be a loss. We count it as loss. But if I was the one, that candle was too huge, maybe I wouldn't have taken this trade. So right now, during London session again, we were trying to take a buy trade. We had a loss here. We had a loss. We had a loss there. Again, we are trying to take a buy trade right here, but this market did not give us an entry criteria. The market was still bear. It printed a lot of bearish candle to the downside, so we did not take any trade at this point. So then during New York session here, the market open, we are we are expecting a bear candle, but what happened? It was a bull candle, because the market has broken structure to the downside, telling us that this market is bear at this moment. So what happened? We did not take this trade. Then another day, the market opened. We are still not going to take a bull trade. We are expecting a bear trade, but the market was bullish. Then we did not take trade again at this point. Then before we knew, this market was able to close above the high. Then as this market closed above the high, we are expecting a bull setup. Then during New York session, this market gave us a bull setup right here. And what happened? We enter our trade right there. Our stop loss come below this bear candle, and we go for our 1:3. 1:3 right there. What happened? The market moved 1:1 and then hit us out. So what have you learned so far? This is to say, if this market move 1:1 in your favor, you can shorten your stop loss to half. So if it comes back and hit you out, you know you are not fully lost. So I'm teaching you something here. The same thing happens here. If it comes back and hit you out, you know you are not in loss. You lost half. So right here, we've gotten another loss. You get. So now, you know why all this loss has been taking place? This is because the market is about to change its direction. So now, the market again is for you to mark your zone. The market again is bull to the upside. Before we know, this market still comes back and breaks structure right here to the downside. It's broken structure right there to the downside. But since this market was bullish, there was another setup here. Let us not to forget, there was another setup here. And this setup was also, that setup was also so it was also a bad trade. That setup was bad. Guys, it's like I'll stop it here. I'm getting tired already. So that setup was bad. But I have to calculate all the trade we've taken. So we know. Sorry guys, call came in. So here was a losing trade as well. But then this market breaks structure to the upside right here. We've seen a structure right here. The market broke it. Now we are expecting a buy trade. So what happened is that this market did not give us a buy setup. Okay, it's broken structure. It closed above that zone during London session on this trade, on this candle. So if you place trade on this candle, your stop loss has to come below this candle. You can see that candle hit stop loss. We have a stop loss here. Let me identify it properly so that we know how to calculate. Have a stop loss there. So then during another day, we had this market broken structure to the downside here. And then during London, we have a sell trade. The market closed bearish. Our stop loss right there, we go 1:3 right there. So guys, I'm going to stop it here. I'm going to stop it here because I'm getting tired. Let us count how many losses and how many win we got. We have one loss here, one win there. You can see this market is still going. It's still going. Even this day, we had the same thing. This was, and then we had our bear trade. Our stop loss come, we go 1:3 as well. And that was our 1:3 right there. So we have 1, we have 2, 2, we have 2. This was a loss. Let me identify it properly. We have 2, we have 2, we have 2, we have 3, we have 3, we have 4, we have 5, we have 6, we have 6, we have 7, we have 8, we have 9, we have 10, we have 11, we have 12. So we have 12 wins since August. We have 12 wins since July. I didn't start at the first month of July. I just start from 24, almost 30 before we enter August is where I started to do this back testing, because I don't want to back test everything, just to show it to you guys. So you have 12 wins and you lose, let's count, 1, 2, 3. You lose 3, you lose 3, you lose 4. You lose 4 here. Here was a loss. You lose 4 here. You lose 4. You lose 5. You lose 6. You lose 7. You lose 7. You lose 7. It's like there is a place I did not. You lose 7. You lose 7. Okay, yeah. You lose 7 trades and you win 12. So you should do the math yourself. Going 1:3. Go 1:3. You know the math. You do the math yourself. You get. So that is it. 1:3 times 12. Do the math and see. Then minus 7. You see what you got. So if you were trading with $100 account or $200 account, you are risking 2%, or you choose to risk 4% per day. That is, during New York, you take 2 trades. During London, you take 2 trades. Then 2 times 12. You see what it is. 2, 10, 20. 2, 10, 20. You won 12 trade. So 2, 10 is 20. 2, 10 is 20 times 30. That is 20. Oh, I'm calculating on 100 USD. So I'm calculating around 100 USD. So if you're calculating based on $200, so 2% of 200 is $4. So 4 times 20, you see what it is. So when it comes to $100, 210 is 20. You get. And you won 12. So 2 times 3 times 12. 2 times 3 times 12 minus 7. That is what you will have at the end of a month or 2 months. Note, let me just say this is a month. This is what you have for the month. July. August has just, we have few trade during August. August started around, I think August gave us a lot of losses. If that we went 1:2, this kind of setup, if you go 1:2 point something, you can still make profit, but you stick 1:3 because of future. So guys, if you are new to this channel, do well to subscribe. If you've learned something from this very strategy, give it a thumbs up. Your comments are welcome. You can share it with people who really like something like this. So I remain Aqua FX as I sign out. Peace.